Hello, this is Dick Barr, managing broker owner of the Dick Barr Group Real Estate Brokers and Consultants. Today, we are going to talk about the 7 biggest, most fatal mistakes buyers can make while waiting for their loan to close. Stick around, we'll be right back. Welcome back. This is Dick Barr, managing broker owner of the Dick Barr Group, Real Estate Brokers and Consultants. And today we're going to talk about the 7 biggest mistakes buyers make that can screw up their loan before closing. We're going to jump straight into it and get you right back to work. Here, number 1 of the biggest mistakes buyers make. They deposit cash in their bank accounts. So number 1, you don't deposit cash into bank accounts. Why, you ask? Well, when the banks are going to loan you a lot of money, they want to make sure that you're not, number 1, laundering any money, and number 2, borrowing any money. They want to make sure you could afford to pay back that loan. So they want to make sure that you're not depositing strange or mysterious amounts of cash into your bank account. And if you do it, it's not the end of the world, but you will have to write a letter explaining it to the bank of why you deposited that cash, and you might even have to show receipts or transactions for the reason you did it. So if you come across cash while you're waiting for your loan to close, hold on to it and use it at McDonald's or whatever, but don't deposit it before closing. Number 2, don't make large purchases like furniture or cars. Now that might sound like common sense, but you'll be surprised at how many people, while they're waiting to move into their new home, that their loan is in underwriting, and they'll go out and they will buy $2, $3, $5,000 worth of furniture, and they'll put it on a credit card. What's even worse, those large purchases can destroy your mortgage process. And we've seen it happen where the banks have pulled back their loan approvals because the buyer's debt to income ratio has increased, or because the buyers have started spending inordinate amounts of cash, which makes the bank very nervous. Now remember, those banks are about to give you somewhere near $250,000 or more, and they want to make sure you're good with your money because they want to make sure you can pay that loan back. So no large purchases as you lead up into the buying process and throughout the closing. You're more than welcome to buy anything you want after closing, but don't screw up the mortgage by making large purchases like furniture or cars before closing. Number 3, don't co-sign for a loan. I know you're a good person and you want to help Cousin Susie, but don't co-sign for that loan. When you co-sign for a loan, you become responsible for that loan, and that can screw up your debt to income ratios. It can also change your credit score, and the banks will pull your credit score and they'll pull your credit report right before closing just to make sure nothing's changed from the approval process. So don't co-sign for any loans, no matter how nice of a person you are. Tell Cousin Susie to wait until after you close on your loan, or better yet, don't co-sign for a loan. Next, don't change your bank accounts. The lender who's going to give you the money wants to be able to see the past 2 or 3 months of your bank statements at any given time. And if you change your bank accounts in the middle of the process, it just looks confusing to the bank, or it looks fishy to them. So don't change your bank accounts. It's one of the biggest reasons why loans fail, is if buyers close their old account and open a new account. You're more than welcome to open a new account if you're going to create a new money market or a CD or a new savings account, but don't change your primary bank account. You got to keep the account that you work with because the bank wants to see that as proof of your payment and transaction history. Don't apply for new credit. This one is an obvious one, but you'd be surprised. A lot of times in the process of buying a house, You go through the loan application, and then some credit card companies will see that you are in the process of doing so, and they might be sending you offers for some prime credit offers, low interest rates, or transfers, cheap transfers. You don't want to apply for new credit because that can affect your credit score. And sometimes the credit score is so close that, number one, the best case scenario is it will adjust your interest rate because your score is not as high as it was when you first applied. And the worst case, it could put you below the threshold where you no longer qualify for the loan you're trying to get. Next, number 6, don't close any credit accounts. This one's a little bit less obvious. You think closing credit accounts is good. That means less opportunity to ruin your credit. But surprisingly, when you close a credit account, because the bank does a big formula to figure out what your credit worthiness is. And that includes the amount of credit available to you. If you close accounts, sometimes that can create a lowering of your credit score. And that also, just like applying for new credit, can put you below the threshold where you no longer qualify for that loan. And the lender will pull back their approval and you can't buy that house. And number 7, which you would think is the most obvious, but I've seen it several times in my 16 years of doing real estate. Do not quit your job. Your job is how the bank knows that you can afford to pay them back. And when you quit your job in the middle of the process, that raises a lot of flags. Number 1, you might not be moving in to a new job right away, which will affect your debt to income ratio, which is the most obvious. But number 2, it also shows that you are a little bit more impulsive of a person, which makes the banks really nervous. They don't like to see change. The banks are very conservative because they're giving you $250,000. So be smart. Don't do any of these 7 things. If you must do any of them, talk to your mortgage loan officer. They're going to give you some good advice, and they're going to tell you what their underwriters will want. So if you have no choice but to switch jobs, or you've momentarily lost your job and you need to get a new job right away, your lender's going to help you figure out how you have to do it, and then any documentation that you're going to need to show the bank that you still are a good credit risk and worthy of the loan. So that's it. These 7 things. Stay away from them between contract and closing, and you'll be okay. Take care. Have a great day, and we'll catch you next time.